You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. That little bit of tunage means it is time to rock out once again with everyone's favorite. I hope it's your favorite. It is certainly mine, although I may be a wee bit biased. Yes, it is time for the option block. My name is Mark Longo, coming at you live live and actually live to tape as well. We're doing both there today. Managed to make it all happen here on the old Options Insider Radio Network. I sound a little bit different because I am once again on the road. No rest for the wicked here on the old Option Block program. But the show is still coming at you and coming at you live, so you get to enjoy it however you like to again this week. And joining me on the old program today, we got a veritable cadre of characters. Let's start out. Let's go out. Let's see. Where should we start? Let's spin that old wheel. Okay, here we go. First off, it is the sleepy, the tranquil hamlet known as St. Charles, where we are joined once again by the maestro, the Major D over there at Skippy's Gyros and Lemonade. Also, he has a little bit of a moonlighting gig he does at stcharleswealth.com. He is Uncle Mike TOSAW. Uncle Mike, welcome back to the show. How goes your Major D gig?
Always happy to be a Major D. I've never really been called that before, so I have to say when I woke up this morning, I did not say to myself, I'm probably going to be thought of as a Major D this morning or today. So
see?
Always creativity on this show. I never know what I'm walking into in the introduction. I love it.
You never know what you're going to get. And you also never know what you're going to get when you toss it way out there to the hinterlands, to the far, far reaches of these here continental United States listeners. We almost are out. Almost out. Not quite. Right to the very edge in a little space called Maine, where we are joined by the man who likes crickets and clams and scratchy noises. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, how go things, sir?
They go well. I did send you photographic evidence of the thievery, the clam thievery that goes on in Maine. But things are okay. Just waiting for Friday, because now apparently the market has to wait until the big meet, but we can talk about that later.
Ah, yes, the skullduggery continues behind the scenes. I may have thought as well, listeners, you thought that the skullduggery was over, that the clam pirates had retreated, but nay, they have returned. So at the Rock Lobster, if you hear some shotguns and some swearing in a Maine accent in the background during the show, you'll know what's going on over there. And last but certainly not least, I don't think he's dealing with any clam piracy. He's just got a lot of other things cooking in his neck of the woods. He is the last dad of Krypton, Mr. Trey JARRELL, holding down the Fidelity hot seat there today. Mr. Trey, welcome back to the program. A lot going on in your neck of the woods these days, wouldn't you say?
Very busy day, very exciting day for us here at Fidelity. Definitely no clams being stolen in our neck of the woods, though.
Maybe let's hit it right off the top before we even get into the trading block. Obviously, like I was mentioning, some listeners may not have seen it yet. Big day for you guys. You guys jumping into the zero commission fray. Why don't you break it down for us really quickly? Obviously, stocks are in there. What else is in there? Are options in there as well?
Yeah, they are. So basically the breakdown, stocks and ETFs, all zero commission here for you now at Fidelity. For option trades, we've gotten rid of the base rate. So it was $4.95 plus 65 cents a contract. So we've done away with the $4.95. You do have the 65 cent per contract still on there. One of the things that I always like to point our option traders to, that little, especially for those option income sellers when you buy those trades back to close, usually a little discount. We've changed that now. 65 cents or less buying back an option to close is going to be commission waived there as well. So definitely a very exciting day here for us, and I've had a lot of great comments and calls on it here so far today.
Well, they heard us discussing it on the last show, the higher-ups, and I think they realized once we were fans here on the option block, they had no choice, right? They had to proceed.
Exactly.
All right, and we have to proceed right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's get to it. A little bit of what's trading here in the old markets. In a bit of a weird week, as the Rock Lobster kind of alluded to. We are kind of in wait and see mode these days. Everyone waiting to see what the next shoe is to drop in trade war land. Will there be more exacerbations? Will we try to delist more names? Will there be détente? Everyone shaking hands? Who knows? I guess we'll find out tomorrow. In the meantime, though, the market's having a bit of a joyous waiting period. Rally ho mode yet again today. Not quite the full up 1.5-2% days we've seen of late, but still fairly aggressively to the upside. Most of the major indices, in fact, all of them up over 0.5%. S&P actually leading the charge today. A rare day where the S&P leading the dance, up coming into showtime here, right around almost 0.7%, about 2/3 or so. And let's see, the Dow and the NASDAQ both kind of tied around 0.55 or so percentage-wise. Also seeing gold taking a bit of a dip. No surprise there. As markets rally, gold tends to dip, usually. Not all the time, but usually. And oil actually getting a little bit of a lift, too. If you like oil and you like the Rock Lobster, stay tuned. In about an hour or so, hour and a half, we'll be chatting more. So all sorts of commodity fun with myself and the Rock Lobster. Who knows? Maybe some others will join the party. It'll be fun. So if you like all that stuff, all the stuff we do here, but breaking it down on the commodity option side and futures option side, all that good stuff, TWIFO is your bag. You can listen to it live after the show or, of course, wherever you find this fine podcast program. To sit next, and it'll be right there waiting for you. And, of course, our old friend VVIX is also waiting for us here, waiting for the market, really, I guess, because it's taken a bit of a break. It had a nice little rally earlier in the week. It got up to over the 20 handle again. So I guess our friend Brian from OPR, he probably, I tried to write to me again and say, hey, I won this week, because he did have that 20 handle pick from a couple of weeks ago in the crystal ball. So we ever so briefly flirted with 20 to the upside, got up to about 20.30 or so on Tuesday. And then looks like it never, Wednesday. It was Wednesday. And then it kind of shot right back down to where we are right now, 18. That's still up a point from last show, but nowhere near as high as it could have been a few days ago. And looking out over here to our old friend VVIX, as you might imagine, it goes up, it goes down. The VIX does anyway. That means VVIX is elevated yet again at that at that very critical triple-digit level of 100 right now, that demarcation level. And then you got to start paying attention. VXX coming up a little bit, actually up about half a handle. It hit a high of nearly 27 this week. So everyone who was betting on hardcore erosion, and we know from vol views and looking at the OI out there that a lot of you have been of late, very near term too, September, October, kind of heartbreaking paper. Not getting that this week. Threatened 27, now it's at about 24.5. That puts it up about half a handle from where we were on our last program. And since I invoked him and roundly mocked him a little bit, I guess we'll start with the Rock Lobster, sir. First off, Mr. Rock Lobster, how excited are you to be doing a little TWIFO action in a little bit? But before we even get there, what's on your radar for this show, sir?
I am excited about TWIFO because there's a lot of action. I mean, all the action is in gold, bond futures, gold futures, oil futures. So there's like, this is macro land. The Viceroy would be happy.
I said the Viceroy is giddy as we speak. Wherever he is right now, he's a giddy fellow.
He is, because macro. The equity market basically is hurrying to, Waiting for Guffman? Was that one of those funny movies some time ago? What I would say is the vol market is waiting for a trade deal. Trump now supposedly is going to go personally to talk to the Chinese delegation. I guess, all I could say is it's not going to surprise me if there's a big photo op and a news conference and a press conference that there has been some sort of, because I don't think, now like everybody's kind of looking at the Chinese a little harder than they did last year. The U.S., a lot of uncertainty, kind of hurting growth. Nobody's really winning the trade war for sure. So maybe some kind of détente and they keep moving forward. It's not going to surprise me if it happens. Let's put it that way. So what happens to VIX, VXX? That's a good question. If it's kind of a big fail, the market is going to be sad for the short term for sure. Maybe, what do we get down, 28.50, something like that. The general, oh, God, we've got to slug through this for another 6 months or something. So that definitely will not be a market positive. I think vol would subside eventually. If we do have some kind of partial trade deal, I think the market will rocket because the algos will love it, and basically nobody will sell, so the market will go straight up. And volatility will come in eventually. So I'm looking like till next week, maybe Tuesday, Wednesday, after some of the dust is cleared. Who knows about Monday, depending on the type of move. So you could see, like, VIX, my prediction, 15 or 25. How about that for Wednesday? Could be either one quite easily, as a matter of fact. So if this, because it's all been trade deal, I think volatility is all trade deal. 100 VIX is usually a big move in the store, so, or 100 VVIX. So I think that's what we're sitting on waiting. And right now, like, again, we'll get to this probably in the TWIFO show, but, Treasury bonds or, Treasuries are, prices are down and yields are up, which is, I think people are trying to get ahead of the news possibly for this weekend. Like, the market could be, once again, sniffing for a deal that doesn't happen because it's happened so many times. But the signs are pointing to something getting done, at least with yields going up again. So I think that's where we are. That's where VIX is. Full disclosure, I'm pretty much, I'm looking for 25 or 15 next week. That's all I'm going to say. I'm going to leave it right there.
You're buying yourself a little bit of movement out there in the vol space. Sorry, sir.
Yep. Yes, a little bit.
Yeah, so that should be interesting. So you heard him. He's already going out on a limb with an early crystal ball prediction, listeners, of 15 or 25. He has an interesting range. He's saying we got to go somewhere, just not here, which is intriguing. Let's see if it's equally intriguing over there in the land of Fidelity. Things are lighting it up. Things are getting cheaper. Mr. Trey, are people taking advantage of these low commissions? Are they trading it up? What's going on the Fidelity platform?
Of course, yeah. It's hard to pass that up, right? $0 trade's going to take advantage of it. So kind of an interesting day on our orders by Fidelity customers here, too. Kind of all over the place. Have a few names that don't usually pop up, here today. First one, coming in at number one on the list. One that is frequently here in the top 10, at least last few weeks, was Roku. Coming up here again, Fidelity customers, definitely on the buy side here today. Got about 60% buys right now to 40% sells. Roku had a big jump this morning. Had some positive analyst remarks here earlier, but actually pulling back a little bit now, down about $1.80 here at 116.11. Chart's been interesting here on this one. Right after the big sell-off from 170, looks like it finally caught that base at 100 and started to see some upward movement. We'll see where the rest of the day brings. Looked like it was going to continue that, upward trend here today, but, did pull back since then. But, option market certainly interesting in Roku too. You see, really the heavy volume on the call side here, about 117,000 calls to about 59,000 puts here right now. So, certainly seeing some call love here. The action, though, a little bit heavier on the sell side than the buy side of the calls here today. So, that one certainly one that's popped up here a few times before. A couple other ones on the list here that aren't out there too often. Today we see Bed Bath & Beyond, BBBY, coming up here. Fidelity customers trading that as well. Also on the buy side here, from the Fidelity customer standpoint, got about 55% of orders on the buy side. So taking a look at the stocks, this was an interesting one, right? It's been trending down here since April. Hit a low of just over $7, but since then, kind of recouping here today. But big upward move today, just shy of 20% here to where it's trading at $11.83. They'd announced they're bringing in a new CEO. Here was one of the marketing executives from Target. So, market certainly liking that news here. Fidelity customers positive on it here on the buy side. Option market, maybe a little bit more split here as well. Just about 50-50 on calls and puts here right now, about 49,000 calls to 51,000 puts traded here on the day. 90-day average volume, that's only 27,000, is just under 100,000 here right now. So, big options volume in here today compared to its average there. The other one here today, again, one that's not usually on our list, popping into the top 10, was PCG, Pacific Gas and Electric. Fidelity customers on the buy side here too, about 78% buys to 22% sells right now. The stock is down just under 30% right now, trading at $7.85. A lot going on in the news with PCG. Last couple of days have been announcing some various large power shutdowns here across the state of California. But certainly interesting reaction with Fidelity customers coming in on the buy side here. Option market, right, leaning heavy towards the call side as well. 77,000 calls right now versus 41,000 puts. And, the stock is, certainly had quite a bit of trouble, here from that charting standpoint here over the last few months or last year here, really. Not quite at the year lows, right? It actually dipped lower here in January, right to about $6. So near that level here right now. And this is a sector, right? This is a utility stock. Utilities sector has been, really performing fairly well, right? Leader here in the S&P over the 1 and 3 months. So, you're a stock that's in a sector that's doing well, but unfortunately a stock that's, really been underperforming. But, at least for today, even with the sell-off, options market kind of leaning towards that call side, Fidelity customers leaning towards that buy side. So a little bit of a different take here from what they were looking at. Last one I wanted to mention here, Last Semper, I know talked about this briefly on Monday here, stock that he was paying attention to coming into earnings, which was Delta Airlines here. So earnings did come out here this morning. They did beat their earnings per share number here. The consensus missed on the revenue consensus target. Stock down here right now, down $1.26 at $52.65. Fidelity customers on the buy side. So kind of the theme today on the buy side on, everything, whether it's up or down, 72% buys to 28% sells here as well. Charting standpoint here on this one, kind of took a dip. It's very interesting. Had the same type of a drop back here in April through June, where it bottomed out right around this $50.50 to 51-cent range, right where it's sitting at today. So kind of an interesting level I'd pay attention to if it does manage to get some traction. Did drop lower and has pulled up a little bit since then. But still below that 200-day moving average, which is right about the $55 standpoint. But on the option side, heavy on the calls here today as well, 65,000 calls to 32,000 puts here. Again, just under 100,000 options traded here today. This is on a name that usually does about 22,000 90-day average volume, so seeing some heavy action in there today. But those were the ones that popped up here in the few interesting ones in the top 10. I mentioned a lot of names here that don't usually pop up, but seems like Fidelity customers kind of busy today, taking advantage of those $0 trades. But that's what I had on our radar today.
Yeah, taking advantage of them there, zero commissions and, no ticket charge there on the options side of the fence. Uncle Mike, sir, what are you doing to celebrate this grand, fine, zero commissions day? How are you celebrating at St. Charles Wealth Management? Maybe you're doing some crazy iron condor swaps, something multi-leg fun? I
should start doing that. Just actually go out there and just trade just for the heck of it, right? That's sounding prudent. No, I think that Andrew really hit the nail on the head in terms of this being a very macro-driven market. I think if you watched the futures trades yesterday, it was actually really interesting right around dinner time or a little after dinner when all of a sudden the S&P futures dropped like about 30 points or so almost instantly when there was an announcement that they didn't think there was going to be a trade deal and that it just wasn't going to happen. And then a couple of hours later, they said, oh, no, that was fake news. It didn't really happen. It looks like there is going to be a trade deal. And then most of the market went on and recovered. So I think that the market is very sensitive right now to what's going to happen with the trade talks at this point in time. The only thing that I could see that would not put us at the 15 or the 25 level in VIX is what Andrew said. The only thing I could see stopping that, honestly, is if they decided to punt and say, oh, we're going to hold off till later and then do that. So, but other than that, I think that all eyes right now are on seeing what's going to happen with this trade deal.
Let's see where the market's eyes are turned now that a lot of people have access to very low commissions out here. Let's see how that's changing things up a little bit here. Let's look at the indices first, coming into a little bit towards the latter portion here of the trading block, and looks like VIX actually doing some decent paper, a little bit north of half of its ADV. The ADV a little bit, it's right around 500,000 contracts. The ADV today's volume at about 260,000 contracts. SPY at about 1.5 million. Its ADV about 3.25 million, so almost at the ADV there as well. SPX pushing 650. The ADV about 1.4 million out there. The Qs at about 390. The ADV out there a little bit shy of 700,000. And the Russell, a.k.a. IWM, not the RUT, but IWM at about 165 with the ADV at about 530,000. Let's go out to the individual names, see what's lighting it up out there. We've got another day at least where it takes 100K to break into the top 10. That's a good barometer for at least a decently active day. We have a lot of days lately where we're seeing 80, 90,000 makes it into the top 10, and that's just not the way it's supposed to be, listeners. But today, nice 108 get you into the top 10. These numbers as of a few minutes ago, so pretty updated stuff here. Baba at the number 10 spot, 108,000. Number number 9. Microsoft at 116,000. Number 8, PCG. $1.19 on the tape. Number 7, Netflix, doing, 132,000 contracts. Number 6, Tesla, 143,000. Number 5, Bank of America, 151. Number 4, AMD, a perennial top 10er these days, sometimes a top 3er. Today at number 4, 160,000 contracts. Number 3, ABBV, our old friend. I think it's been on the odd block, not a little while ago, not too recently. 170,000. Number 2, Roku, $177. And number 1, you know it, you love it. It's Apple, just dominating the tape today. 414,000 contracts on the tape there. So hot stuff there in Apple land. And let's see if we've got any hot stuff of our own as we keep on rolling right on into the iBlock.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, you know what time it is, listeners. It's time to get weird. It is time to get wild. It is time for the Odd Block. Let's kick it off here. Let's see. We like doing some live scoops here, see what our Eye of Sauron is kicking us today. First off, what do we got? We've got everyone's favorite, ProPetro Holding. Ticker symbol PUMP, P-U-M-P. I like it. You know, I'm a fan of an appropriate ticker, and PUMP certainly falls into that category. Let's see. This is the name that today is trading. Oh, pretty good day for them today. They're trading $9.44, up about $1.50 or nearly 20% on the day. So rally ho mode here for Pump. Let's see. Over the past year, it's had an interesting little saga here. A year ago, it was trading nearly $18, $17.80, and then it rallied up to nearly 19 in November. And then it sold off like pretty much everything else right around Christmas Eve, down to 12.13. Then it turned right back around, had a nice run up to 24. So it pretty much doubled over that was in April, mid-April. And then it kind of turned right back around again. And by August, it was trading 11.5. 52-week low on this name came actually very recently of 7.77. And here we are today now, of course, at 9.44. So bouncing up, I should say, from that low end of the range. So a crazy year here for ProPetro Holding Corp. Let's see what we've got lighting up our Eye of Sauron. I think you're going to like this one, Mr. Rock Lobster. This seems like it's an up your alley kind of trade. We got the Dees 7.5 puts. So these were at the money until about a day ago, until today, really. So now a day ago, these were at the money puts. Now, not so much. Now a wee bit out of the money. Looks like someone deciding he likes that level, and he wants to draw the line in the sand right there to the tune of 10,000 of these Dees 7.5 puts going up for 45 cents. That's pretty much a nickel off the bid. These are opening for our friends over there on the Philly. Let's see. So Mr. Rock Lobster, I don't know. We got a stock that's had a bit of a tumult, but this guy is writing these puts pretty much at the 52-week low. The stock has rallied off of it. Maybe I guess you could say the other way around. If he had gotten these off, let's say a day or so ago, he could have got a little bit more juice for those puts. But maybe his outlook has changed given today's news. What do you think about these clearly line in the sand puts in Pump?
You know, what's the track record of our line in the sand people since we started highlighting the line in the sand puts?
You know, that's a good question.
Overall, I would say
we review a lot of them, but I don't specifically have the metrics for the line in the sand versus the guys who buy calls versus the guys who do all sorts of other crazy stuff, right?
I mean, I'm just going to say in general, which of course this is a big generalization. Wow, actually, an oil field services company's rallying. When was the last time we saw that? I think XOP's at multi-year lows. These guys have been pretty. Oh, I don't know if they're guys. We got to watch those gender pronouns. So these people, whoever are selling the people, line of the sand people, they're like remind me of Star Wars. Like the sand people in Star Wars. These are line of the sand people.
Like that. Do they roar like the sand people in Star Wars?
Oh, I'm going to sell these puts.
I hope that happens somewhere on a desk. Someone just makes that noise when they trade. That would make my day.
Your whole concept just changed now. We have the line of the sand people from Star Wars, and I know you're a big fan of that joke. So I threw you a little bone there.
I have no reference for that license whatsoever.
You have no. So they have usually they have done well as far as I can tell. So now clearly yesterday would have been a much better day, but maybe they're selling these because they're sensing the free money and the 5% return on risk to December, which probably will do better than the market overall if they can collect that. So this is the classic though. The stock is up $1.50. They sell 10,000 puts for 45 cents, and they go out 50-cent bid.
Yeah, that's just old school. How are they now? Oh God, I should
old school screwage.
Cancel that first lot there. We're just warming up, right?
Exactly. And then, it's because what happened in the old days, like market makers would get shut out of the print, so they're like, okay, you shut me out of the print, screw you, broker. So they're gonna bid them a nickel after they sell them. That's what we call angry trading, and I would caution all the listeners to not trade angry. I'll just say that. I'll leave it there. I will leave it there, Mr. Long.
Well, we all learned from Groundhog Day we can't drive angry, and now we've learned we can't trade angry as well. So the wisdom continues to spread here. To flow, yes. On the options inside. Yeah, I mean, I haven't looked at the news, what's driving this particular name up. In terms of line in the sands names we've seen, this one doesn't offend me. 52-week low, a decent level. Obviously, you could have got more for him a day or so ago, but hey, I'm sure the narrative has changed markedly. The stock's up 20%, so he probably has a much more confident perhaps in that level now than he was perhaps a day ago. So interesting stuff. I think we're going to put those. Tell you what, Mr. Rock Lobster, we'll do it. We'll put those in the to be watched category. And we shall return to these lines. So we could answer your question of how well these line in the sand, at least this specific trade, how well they fare. We shall return, listeners. So mark that in your calendars. As we keep on rolling into our next name, what do we got here? Let's see. It was, our old friend Delta Airlines, ticker symbol DAL, D-A-L. Trading today, 52.64, off about a 1.25 or about 2.4, almost 2.5%. And this is the name that a year ago was trading pretty much close to where it is right now, right around $50, 49 and change. And then it shot up in, December to about 60. And then, of course, in the great nadir of late December, early January, got down to pretty much its 52-week low of 45.08. Then it kind of turned back around. By April, it was trading 57 again. And then by, July, it was trading 62. Which is close to its pretty much 52-week high, about 63.5, right around that July timeframe. Since then, it's kind of sold off from that peak and got down to where it is right now, 52.64 again. So not quite the 52-week low, not quite the high, kind of right in the middle, the Goldilocks level of the 52-week range. Let's see what we got lighting up our table. This was kind of a twofer. What first came across our radar was a 5,000 lot of the NOV double calls, AK55. Some people have asked, what is double? Double is just 55. It's just old trader speak working its way out to the 4 sometimes. He can't kill it all. Sometimes it comes back. Let's see. NOV double calls trading 76 cents. That was lifting the offer there 5,000 times. But then we dug a little more. So that's weird. Just an open upside lot of NOV double calls. And it turns out it wasn't as weird as it seemed, because against it looks like there was actually an old school vertical to the tune of 48 cents. Paper also coming in and selling out the NOV 57.5 calls. So a nice $2.50 vertical for about 48 cents on this bad boy. This is at least opening on the NOV doubles, not so much on the 57.5. So I guess it could be rolling down. Mr. Rock Lobster, while you're busy typing away there, what is your Spidey sense telling you in terms of, you think this is a roll? Think this is just a straight up opening vertical? What's your Spidey sense telling you?
That's what I get for I try to do things quietly and secretly, yet somehow Longo figures it out.
I know all. I see all.
That is why it is the Eye of Sauron. I totally understand that now. I just thought that was all hype for the show, but now I realize it is real.
I'm like Roz from Monsters, Inc. I'm watching. I'm always watching.
This is I would just say on this one, I don't know. I don't know on this one. This is a little bit of I see buying the double calls, got all that stuff. And I thought Delta was just, confirmed its earnings before market open. So are they taking their money and they rolling down? So here's the thing with this. Did they roll down because the stock is down on the day? Could that be possible? Maybe they're like, okay, we're gonna jump into these. We had some open interest on the NOV 57.5s. They disappointed us massively, so we're going to close them and buy some of the NOV 55s, thinking that they're still going to try to, get a pop out of this thing. Or the other thing where you could turn it kind of on its head is maybe they sold the 57.5s and they collapsed because the pricing is a little funky on this. It's hard to tell right from the because everything kind of traded on the offer side. So it would make sense to me if somebody had written the 57.5s. They're closing them for 28 cents, and now they're writing the 55s because the stock is down, and they want to grab the extra juice. That's normally, what we would have seen like on the floor. Like somebody had that right on, and now they just want the extra juice. The earnings are out, and the stock's not going to go up, so they'll just go for the extra juice. That's what I would think. Or you would have door number 2 where the customer is smoking hopium, and their 57.5 calls aren't going to make them any money. So they're going to roll down, spend more money, and hope the stock goes up when clearly it does not want to. So trade number 2, door number 2 is the hopium trade, and door number 1 I would say would be the savvy call writer trade. There you go.
The savvy call writer trade. Yeah, because either way, $2.50 spread doesn't excite me too much. Rolling down in the same month, I'm not a huge fan of that. It could be done. I'm not averse to it all the time, but it's not my favorite trade. Usually, if you're going to roll, give yourself a little bit more time to play, right? But c'est la vie. I could see all different ways for this one. What do you guys think, listeners? I'm curious to know what you guys think as we move on into our final name here. This is ECA, ticker symbol ECA. This is in Canacorp. This is a nat gas company, or as they say on their company profile, they're engaged in hydrocarbon exploration. I like that. Trading today, $4.18, up about a penny. So pretty much unched on the day. But that's not the case for the year. Oh, no, siree. Nat gas has moved over the past year, and this name has kind of moved as well. A year ago was trading about 3x, about $12, actually $12.50. So a wee bit farther north than it is right now. And then it pretty much sold off precipitously by the time we got to the nadir, or at least for that time, was 5.11. That was down on Christmas Eve yet again. So it sold off pretty hard from October to December. Pretty much went from $12.50 down to $5. So just got its wings clipped pretty aggressively. Then it hung out in that $5 to $7 range until about May or so, when the worm seemed like it turned again, and then took a beating down to 4.5. And then they kind of slowed down to its 52-week low, down around 390 or so. That looks like it came around August, or actually they could have touched it again recently because they've since sold off again down to this level. They briefly spiked back in early September back up to 5.5, but that was very short-lived and right back down to where we are right now, $4 and change. So let's see what our Eye of Sauron picked up here. Oh, this is kind of a weird one, Mr. Rock Lobster. Because our Eye of Sauron, it likes to look for, prints and interesting prints and blocks and things, as well as other fun things. And it spits out these no 4 calls, going up 3,508 times for 50 cents when the market was 50 cents at 55. So you look at it, you think, oh, that's interesting. That's an overwrite, maybe, for 3,500 times, opening on the Philly. But, something just didn't ring true about that. So we dug a little bit deeper. This is one of the things I like about the Flow Masters platform. If you type in some names, it'll tell you how these things actually went up. And a total, actually, of 27,000 lighting up the tape today. And they break it down by where they went up on the spectrum of execution, which is kind of nice. So of that 27,000, obviously that's a lot, 55% actually going up on the offer. So lifting the offer over there, Mr. Rock Lobster. That tells a little bit of a different tale. That actually seems like someone, instead of looking to grab a little bit of yield between now and November, is actually looking to get the upside ball rolling 27,000 times. So obviously there's a lot of funkiness going in. Obviously they're probably working some orders, so that's going to mess with the execution metrics a little bit. They got a print lifting in there, and people are hitting it and working around it because you're not going to get 27 off in one clip. Doesn't sound like this fellow did here either. But still, interesting stuff. So you can parse this a bunch of different ways. Mr. Rock Lobster, what is your spidey sense? What's it telling you? You think you're going to go with that majority buying, make you think that this guy is swinging for the fences here in ECA, or do you think it's more like he's looking to grab a little bit of old yield between now and November?
This is a class. I think we would used to call these cage match options, where there's one size guy on one side and then there's a size person on the other, and they're like, they're duking it out. in the cage to see what wins. And normally something like this, I would say the seller is a buy writer. That's just pension fund type buy write activity. The yield on this is absurd. It's 50 cents on a $4 stock.
Pretty juicy.
It's pretty juicy. It's like it's 38 cents, 32 cents over parity. So it's not 10%, but let's call it 8%. Stock at the bottom. They actually pay a dividend. So it's like somehow it's a nat gas company that makes money when nat gas is $2.25 a BTU or something. Very, very interesting trade. I think this is a rider. Just the yield is too big. My big question is, why is the vol so fat? So as you know, when you put your trader hat on, you put your sleuthing hat on, Mr. Longo, you're like, why is nat gas juice stock like it's pretty much a dead industry right now, as far as I can tell. If you want to look at stocks that haven't done anything, look at like Exxon and any producer, XOP. Like this year has just been a 0 year for them. Maybe it's the bottom for nat gas prices. I don't know. But anyway, like the rider would make money. The yield is pretty big, but a fairly good chunk of juice. Earnings come out and I think they're like the late October cycle. There's a lot of questions in this one, to be honest. A lot of questions on what they actually do, what they actually make. It's an actual awful lot of volatility for, a known, meaning like nat gas prices are really low. I can't see any earnings expectations to be that good. Yet somebody's willing to pay 50 cents for the no-4 calls. So it's an odd trade. Like the buyer, whoever is buying it seems out of category. It doesn't mean they can't make money, but it feels like they're paying a hell of a lot for that option, to be honest.
Yeah, they're swinging for the fences on that one. Good thing the Viceroy is not here for this one, because he would be deeply offended, I think, by that.
His hat would turn red.
paying more than 10% of the value of the stock for a swing at the bat from now to November. That would deeply, deeply offend him here. But what that means, Mr. Rocklaps? That means we got to put another one in the to-be watched category. A lot of
I think it's worth watching.
A lot of watching. Yeah, that's so rich that I could easily see why someone would want to harvest it. The way I like this playing out in my mind is some size underlying holder to saying, hey, you're going to pay me how much from now to November? Done, I'm out. And hitting that bid all day long. But you're right, someone's got to be gobbling these up, whether it's the desk taking the other side to be nice to this guy. I mean, nat gas has been moving. We will get to that in TWIFO in a little bit, listeners. So maybe there are some secrets to be unlocked there, but we shall see as we put that one also. 2 out of 3 in the to-be watched category. An interesting week, Mr. Rocklap. So let's see if you're a listener mail, if it can keep up the goodies as we keep on rolling right on into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, welcome to the mail block, listener. This is where you guys take the reins, your questions, your comments. We usually kick it off every week, seeing what's cooking in the Fidelity client's brain with your question of the week. But I got to imagine this week, Trey, that the actual Fidelity question is pretty much what I just asked you at the top of the show. I got to imagine 90% of the calls that are coming into the active trader strategy desk are like, hey, walk me through this commission thing. How does it work? How does it work for options? Would you say that that's the lion's share of the questions you're getting today, sir?
It has been, yeah. Up until today, this week was, are you guys going to do it? Today it's turned around to a little bit more of detail around it. But, we actually did get a decent kind of interesting option question here in one of our classrooms today, though, that was outside of the realm of commissions here that we can bring up. And I thought it was kind of good timing. We haven't talked, all the China news is dominating here lately. I don't want to forget that we've got earnings on the horizon here for next week. So the question that came in is, if I want to buy an option for an earnings play, should I wait until right before earnings to buy, or buy now? And this is someone that may be thinking out a week or two. And really the thought behind this question was, clients looking at it, if volatility is going to be, increasing, right? If you're expecting an IV to continue to rise, do I want to pay now if that option is going to be more expensive right before earnings? So thought it was a great way to think about upcoming earnings. But, what I always remind clients when we're looking at option pricing, right, we never want to focus on just one aspect, right? We have different components here as well. When we're thinking about that IV rising, keep in mind we do have time decay working against us here as well. So IV may be rising here, keeping that premium fairly steady as time is decaying. We also have to think about potential price moves here before earnings too. We see a lot of names that maybe just flatline a little bit before earnings. You may have, a week or 2 weeks where, price isn't doing much. It is really just waiting for that announcement. But, that's not always the case, right? We do have a lot of stocks that might move into that earnings announcement. So, I'd say with that one, you want to do a little bit of additional analysis on it, right? If it's truly, meant to be an earnings play, maybe you want to wait and see how things shake out. But if you have, maybe some expectations on a price move here before then, you definitely want to factor that in as well. But there's a couple of thoughts I had on that one, but I thought it was kind of an interesting one with earnings coming up here for us next week.
Yeah, that is a very contentious issue. If anyone's intrigued by that, I know a lot of you are. I encourage you to check out all the earnings move results reports, and the season reports we've been posting from our friends over there at ORATS for some time. We have a deep catalog now at the optionsinsider.com. You guys can really go back and sink your teeth into a lot of data if you want on this subject to see how premium buying, premium selling, how it works out. Matt actually will break it down if premium sellers or buyers are winning the day on the cycle. We always say avoid earnings if possible. But Mr. Rock Lobster, that does bring up an interesting allusion to one of your favorite trades. Why don't you regale us really quickly with your, 1.5 to roughly 2 weeks out earnings trade and then selling it right before the event? You're kind of free swing at the bat from a decay perspective trade, sir?
Yes. To follow up on trade, what he said, he's like, there's multiple things in that trade. So in general, and I don't really say always is a hard thing with options, but most of the time, and I mean high percentage, like 90% plus, you're going to get very reduced decay on an earnings cycle purchase. So let's say if the earnings are October 10th and you're buying the October 18 expiry options, the time 2 weeks before October 10th, let's say, your October 18s will kind of hold their value, meaning the liquidity provider is kind of doing the expected value on the earnings. That's kind of what ORATS does. They kind of give you the picture on what they're expecting to move. So it's hard for that strangle to move or the straddle to move to get compressed too much from decay, right? They'll just keep pumping it up, like Trey said, keep pumping the vol up to keep that value. The thing that can happen, though, is all of a sudden the stock or the market decides to go wacky prior to earnings, which can happen. So very much like you said, Mark, it is very few times you get that kind of inexpensive swing at the bat. For a slightly bullish cycle, stock, has a little bit of expectations. Maybe they run it up into the earnings. So buying some calls, but you buy the earnings cycle. A little bit better opportunity to buy options, and then you just close them, right before, and then you don't have the kind of the 50-50 binary, flip of the coin before or after the earnings cycle. So it is a strategy. I've liked it before. A lot of generally as a strategy, S&P 500 stocks that usually the earnings don't get super pumped. It's kind of like a free swing at some options. So it is a strategy you can do if there's stocks you follow. It's not a bad way to go.
All right, I want to get this next one in here from Quent Easwood. He's been bombarding us with questions on this topic all week. He's a newcomer to options, and he's encountered some issues, or perhaps some perceived issues with his broker, and he wanted some help. I will say, by the way, Trey, you don't have to worry. He's not a Fidelity customer, so maybe after listening to this show, maybe you'll lure him to the dark side, sir. So it's not an issue he has with Fidelity. We'll leave it unnamed at Broker X. But Quent's issue was he wrote to us first, and he actually copied the support for that brokerage firm about his issue. He said, I wish to sell my put contracts on the platform of Broker X. I said, I made a buy to open, and now I wish to sell to close. So far, so good. Sounds very reasonable. He says he made a $7.50 put buy, so I think that he means the strike price, on Broker X's platform expiring on October 11th, so coming up tomorrow. He says, now I want to sell said contracts, but I can't. Why is that a problem? And he copied us on that. So that sounded kind of strange. So we reached out to him for a little more clarification of exactly what are you looking to do? What are they telling you when you're trying to sell this? That's usually not an issue. And he sent back a screenshot, which is also, this shows why the concept of execution is sometimes so fraught with peril. It's very much weighed down by your own perception of the space, what you think is a good execution. Also, your knowledge, if you're fairly new to the option space, what is a good execution is a little bit different. Also, confusingly enough, he sent us a screenshot of the GE 9.5 calls, even though he's asking about the 7.5 puts. But I assume it's a similar price scenario here, because what he sent us was an option that was effectively no bid at a penny. So these ones, it sounds like the ones that he bought have effectively eroded down now to zero. And there are 1,020 contracts offered at a penny on this name. So this was an issue of, someone coming to this, they buy the options, they've obviously eroded. They're trying to get that last penny out of them before they go away and not understanding why that is. And obviously, well, maybe Trey, I'll let you walk him through this because you probably do this all day long. But here's an option. There's no bid for him to hit. And there's 1,020 offered in front of him at a penny. So maybe explain to Quent and anybody else out there why he's not immediately filled offering these at a penny.
Yeah, I guess the simple answer is there's no one out there that's willing to take the other side or buy those contracts. So, in those scenario, right, you can always throw an order out there, wait and see if something changes in in price. But unfortunately, it's probably. Not going to work out here for you on this one. Likely, losing trade here for you. But, you do got a day left. Certainly price can change here as well. I would bring up, regardless of your broker too, here, if this is the type of, questions you have, here at Fidelity, we have a whole team of representatives dedicated to answer your option questions, here throughout the day, our active trader group and, myself and Last Emperor, Colin, here host classes on this and do live examples like this, looking at some of these contracts every day. So if you're thinking about taking a step further, you want a little more education on it, something we help out quite a bit with. But, with this one here, just no one out there willing to buy right now. Price looks like it got away from you.
Not for nothing there. I almost said Trey, Quent. But, if you kick the tires over there, fidelity.com/options, set up an account. They have zero commissions now, too, not unlike the broker you appear to be using right now. And you can actually call up a guy like Trey or the Last Emperor or anybody else during the day with these questions, and they will walk them through you. So there you go. If you're intrigued by what you're listening to, maybe you want to kick the tires over there. Uncle Mike, I have to imagine you've received a similar execution-type call from your clients over the years. Why am I not filled on this? What's going on with this? What do you usually have to say to people who have these maybe misperceptions of how things work out there?
Well, yeah, if there's no one there to buy it, then it's not going to get filled. So I mean, when you do this one, I think that just to add to this conversation a little bit, oftentimes if I am doing shorting a spread and I see the long leg of the spread, let's say it goes my way, and the long leg let's say I get out of the short leg for, I don't know, a dime, 20 cents, or whatever I get out of it at, and I see the long leg is at zero by a penny, I'll just sit on it. And if you have a few weeks left to go till expiration, one thing that I've experienced with this is that maybe once every 4 or 5 years, all of a sudden some type of crazy news will come out, and then all of a sudden I made a couple grand because of that, just sitting on it. It doesn't hurt you to have it in the account. It's kind of frustrating looking at it, saying, I got this garbage in my account. I rather wish I had more of a neat and organized screen, but you never know. I mean, it's kind of a lottery ticket type of thing. I wouldn't be so concerned with it because if it's a long option, it's not going to hurt you to be in your account. The only thing I would do is, let's say the underlying expires near that area, and you don't want to be long or short the underlying, depending if it's a call or a put. Maybe give a call to your broker, just give them a do not exercise, because if it does become a penny or more in the money, it will get automatically exercised. But aside from that, sticks and stones can break my bones, but holding long options, if they're at zero bid, can never hurt me any more than they already have.
Yeah, so there you go, Quent. I hope that helps. I know it's never fun to have an option you own rode down to a penny. Maybe at this point you also have to ask yourself, is it even worth trying to sell those for a penny? How many contracts do you have? Maybe 10 or 20. You're talking $20. All this hassle, maybe not worth it at the end of the day versus just but this is a good learning experience for anyone out there who has these types of situations. And again, not for nothing, but it looks like the broker you're using here is not exactly, shall we say, known for a deep bench of customer support, and it sounds like you might have some questions. So if that's the case, maybe consider moving to a broker who can actually, whether it's Fidelity or someone else, make sure you look at a broker who can help you with these types of scenarios. We like helping you, but hey, we're not your broker at the end of the day, so we can't make them print you. And so this is a good one, good question. Maybe it's a good subject. The topic of options execution. Maybe that's an area we need to delve in on a future episode. Might be a good topic for a boot camp one of these days as well. As we keep on rolling into our final segment, it is time to go around the block.
Around the block.
All right, everybody, time to go around the block, tell you what we're watching for the rest of this week into the weekend. Let's start the way we just went. Let's start with Uncle Mike, sir. What's on your radar for the rest of this week? Uncle Mike, did we lose you, sir?
Sorry about that. I pulled an Andrew right there.
You totally
never
pulled
do
an Andrew.
that.
You pulled an Andrew.
I knew it.
All right. Wow, now I'm all flustered. I think what I'm looking at the rest of the week is just seeing if we have a trade deal. And the other thing I'm looking for is if all of a sudden we do get good news and we get a 70-point rally in the S&P, then remember, we still have that 3,000 mark. The 3,000 has been a tough nut to crack, so we're not over it yet. Once we go over it, I think that, of course, I'm bullish, you know me, but until we get there, I think that we need to be pretty careful in these markets. But 3,000 is a key number, so 3,000 and watching the tweets.
Watching the tweets. Everybody's always watching the tweets, the old Valfefe index. Will it spike? Will it crash? Mr. Trey, what are you watching out there, sir, in addition to the old Valfefe?
So obviously China here tomorrow. I think we're at an interesting level of the S&P here right now, right about this 2940 point. Right, this is where we had some trouble getting back up, above here going throughout August here. So kind of right at that point, seeing if this news is enough to propel us or reverse us back down like it did, a couple of months back. But aside from that, earnings next week, it'll be nice to get back in that phase of things. Certainly plenty of financial names kicking us off here, JP Morgan, Bank of America, Wells Fargo through Tuesday and Wednesday. So starting to keep my eye on there and shift towards that kind of individual companies and how those are progressing here for us as well.
And we are progressing over to the Rock Lobster. Mr. Rock Lobster, sir, what is on your radar here for the rest of the week?
All the same stuff. Everybody's watching because this is dominating the headlines. It's dominating the algos. It's dominating market news. So I'm looking for, we're either going to have the big Donald photo op on Friday, with the next episode of the Apprentice, or we're going to have sadness next week, and gosh knows what's going to happen. So I think and then earnings, we start looking at earnings the following week. So I think that's it. That's what we're waiting for, and it would not surprise me at all if the market is in exactly the same place that it was when this show ended today.
Yep, pretty much. And this show is about to end right now. But if you need more, in your lives, don't worry. We'll be back in exactly a half an hour, or just hit the next button on your podcast device of choice. So we'll be talking a lot of TWIFO. But before we do that, let's go back around the horn the way we just came. Let's start with the Rock Lobster. Sir, if folks are intrigued, maybe they want to check out a webinar or two, or maybe they want to check out this new silver class with the texting and stuff. Where do they go? What do they do?
Yes, optionpit.com. We are trying to get more to a sort of a newsletter style trade concept, helping people work through the idea, like come up, why the trade, why the idea, how do you manage it? More like a step-by-step thing for new people that are new to options. So the idea is to take you along on the ride. You can watch how the trade matures and explain it to you, and then you can use our chat service. Ask us a question about it. Ask us a question about the exact trade. So, so far, it's going okay. And you will see more of this kind of thing from us in the future. Hint, hint. So there's a hint. I'm hinting you there will be more stuff because this is what people keep asking us for, so we're going to give it to them.
There you go. Give the people what they want. Always a good business model, I find. Hey, maybe if you have a question out there like Quent or others, you want someone to help hold your hand in terms of how to do this stuff and execute and everything like that, maybe you want to hit up the folks over there in the land of the pit and have them hold your hand through these very scary moments and explain how they work. And if you want someone to hold the hand of your portfolio, perhaps Uncle Mike is a fellow you should call. Uncle Mike, sir, what could someone like Quent or someone else get if they call up? What should they expect, sir?
They should expect very honest customer service from me. I will tell people what's what, and I will be very blunt with them in a very honest, open and secure and polite way, of course. And I'm not afraid to use the option product within your portfolio for long-term investments. I think it's a very vital thing that, assuming that you match the right criteria, of course, but I think it's very important to at least you look at the option of options. Feel free to contact me, stcharleswealth.com.
There you go. Another little slogan for the business card. Look at the option of options with Uncle Mike. And on behalf of Uncle Mike and the Rock Lobster and the Last Dad at Krypton and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, or sending in such great questions. Keep them coming. And we'll see you back here in half an hour for TWIFO. Otherwise, back here live tomorrow, 1 p.m. Central, 2 p.m. Eastern for Volatility Views. If Mr. Rock Lobster is correct, there's going to be a lot of volatility to talk about. And, of course, we're right back here at it again on Monday for more of The Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.